For many people, the idea of living off their investments is a fantasy. The pinnacle of financial independence would be being free from the need to work for money or take money out of your investments. Although it is a dream, it is also a possibility that can be achieved with enough time and effort. In this video, we'll examine every aspect of the dividend investing topic before arriving at the goal of living off dividends. Living off dividends. What does it mean? When a company makes a profit, it has two options. It may either reinvest the money in the company in the hopes of expanding, or it can pay a dividend to the shareholders. In fact, lots of businesses carry out both. They might distribute some of the profits as dividends to shareholders while investing the remainder of the profits back into the company. Dividends can be received as cash by shareholders or reinvested to purchase additional shares. Of course, you would take this money as cash and use it for your living costs if you were living off portfolio profits rather than relying on income from a job. Naturally, as time goes on, the cost of living rises. So if you want your dividend income to meet all of your expenses, it must rise as well. Thankfully, many businesses consistently raise the dividends they pay to shareholders, frequently at a faster rate than inflation. Long-term dividend income growth should more than offset inflation if you're investing in the appropriate companies. While it would be wonderful to be able to live purely off dividends, keep in mind that this is only one possibility. Even though your dividend income might never be enough to pay for all of your bills, even a little amount of passive income can make a significant difference. For instance, $1,000 to $2,000 in monthly cash flow from investments may not be enough to meet all of your needs, but it may be enough for you to retire a few years early. Alternatively, you might combine your dividend income with earnings from a side hustle to enable you to quit your full-time job. Even if you fall short of your ultimate financial aim of using your dividend portfolio to cover your expenses, there will still be much to gain. What types of investments pay dividends? Dividend payments are a possibility with many different investment types. Your risk tolerance, age, and steady income are just a few of the variables that will determine what is best for you. Here are some of the most common choices for the typical investor. Stocks. Individual company stocks are the most popular alternative for dividend investors. Often, these are big, well-known corporations with a lengthy history of paying dividends and seeing their payments grow. The Dividend Aristocrats list is a fantastic place to start if you're wondering which firms have the best dividend-paying records. Mutual funds. A few mutual funds provide dividends as well. These mutual funds purchase dividend-paying stocks, passing on the dividends to the investors, minus the management fees. ETFs. Exchange-traded funds are a type of investment that, like mutual funds, comprise stocks that generate dividends and distribute those dividends to investors. What type of dividend yield should you expect? Your investment's dividend yield will vary depending on a number of factors. Yet having a realistic target is beneficial for planning. A dividend yield of 2 to 5% is often a decent goal. A highly realistic yield of between 3 and 4% is used in the calculations. Many businesses are trying to increase dividends consistently, which may have a compounding long-term effect on your portfolio. Dividend Reinvestment Plan. A Dividend Reinvestment Plan, DRIP, is a program that allows investors to reinvest their cash dividends into additional shares or fractional shares of the underlying stock on the dividend payment date. The phrase can refer to any automatic reinvestment plan set up through a brokerage or investment company, but it typically refers to a formal program made available to current shareholders by a publicly traded company. Now, about 650 businesses and 500 closed-end funds do this. The majority of dividend reinvestment plans allow investors to purchase shares at a substantial discount to the current share price, commission-free or for a small cost. They may have cash minimums. Nevertheless, most only permit reinvestments of a minimum of $10. While DRIPs are often only available to current shareholders, certain businesses do offer them to new investors, usually with a minimum purchase requirement. How much do you need in your portfolio to live off dividends? Let's examine how much of a retirement account you'll need to live off dividends. The table displays your potential income with a portfolio of $500,000, $1 million, and $2 million at 3% and 4% annual dividend yield. The income generated by a $500,000 investment portfolio is insufficient to fully support the ordinary person's lifestyle, but it can significantly lower the amount of additional income you need each year. For the average person to fully cover expenses with dividend income, their portfolio would need to be at least $1 million. A $2 million portfolio would generate enough money for most people to live comfortably. Your balance will rise if your portfolio's worth rises over time, as in the case of rising stock prices. And dividend payments should quickly follow. Also, many businesses aim to steadily raise the dividends they pay. Dividend growth may also have a favorable effect on your performance. The stocks in your portfolio will have a different impact on the dividend yield you'll receive. We'll use a dividend yield of between 3 and 4% as an example, although yours could be higher or lower. Your yield may rise over time as a result of the possibility of dividend growth. Remember that only dividend income is represented by the data in this table. The majority of American retirees are supported financially by Social Security, pensions, or other means. The typical Social Security payout in 2023 will be $1,827 per month or $21,924 annually. Whatever income you get will lower the amount of dividends you require. Retirement income example. Let's now consider an example of how this might progress. According to estimates, the typical American household income is about $87,000. Retirement planning frequently takes into account the fact that the typical retired household spends roughly 25% less in retirement than they did when working. With these figures in mind, let's estimate how much $66,000 in annual income will be able to provide for retirement costs. This is a nice place to start, although it might be more or less for you. You would need a $1.65 million portfolio with an average dividend yield of 4% in order to bring in $66,000 per year in dividend income. Social Security benefits will lower the amount from your dividend plan that is required. Around $22,000 is the typical Social Security benefit per year. To generate the additional $44,000 from passive dividend payments, $22,000 Social Security, plus $44,000 in dividends equals $66,000 for living. You would need a portfolio of $1,100,000 with an average dividend yield of 4%. The amount needed from dividends may also be reduced by income from a side hustle or pension. So as you can see, even if you cannot live entirely off of dividend income, it is still possible to combine dividend payouts with other supplemental income to cover the cost of living. It's crucial to stress that this is only a hypothetical scenario in this case. Depending on specifics like your portfolio's dividend yield, your results may differ. Make sure to subscribe and watch the other videos on the channel for more investing and finance-related content. See you soon.